What if there was a stock that was worth $100,000 that you didn't have to pay a dime for? There was a lender that said, I'll give you 100% of the purchase price of that stock so that you can own it. That'd be nice. But then on top of that, what if the stock paid you a dividend of $300 to $500 a month on a monthly basis? Even though you didn't pay for the stock, somebody else lent you the money so that you could buy the stock. It's paying you $300 to $500 a month forever, a dividend. That'd be really nice. I think a lot of people would sign up for that. But on top of this, what if somebody came along then and they said, I'll sign up to pay down the loan that you used to buy the stock. On a monthly basis, I'll make your loan payments so that you don't have to pay off this loan. I'll pay it off for you. You'll still get the dividends. You still got a stock worth $100,000 that you didn't buy. Somebody else lent you the money to buy 100%, so there's no money out of your pocket. So now you've got this stock that's worth $100,000, you've got the dividends coming in, and now somebody's paying off your loan on a monthly basis. The balance of the loan is decreasing. That'd be really nice. But on top of this, what if that stock was appreciating on a monthly basis? It wasn't going up and down like typical stocks that are based on the performance of the underlying company that stock is based on. It's just trending on an upward basis. It'll go up a little bit more some years, it'll go down a little bit some years, but on average, it's going to go up over time. If you knew that, that would be really compelling to buy this stock. But then on top of all those benefits, what if the IRS came along and said, we really want you to buy these stocks, so we're going to give you a really big tax benefit if you'll buy this stock. This sounds a little too good to be true, but those are exactly some of the benefits that a rental property provides, and I'm about to go through each of those in detail. Atwell from Living Off Rentals, and now you can see why, based on the scenario that I just laid out. I always say that I firmly believe that a high quality rental property is the best investment a person can make, and that is because there's so many financial benefits to a rental property. A lot of people just think about the cash flow when they think about rental properties, but there's so many others. And so in this video today, I want to break down that scenario and break down each of the major financial benefits that I talked about in the intro scenario there. I think when I'm done, you're going to see that when you compare rental property investing to other asset classes, or even other investments within the real estate sector like flipping or wholesaling or some of these other strategies, that rental property just totally takes the cake. Like there's no comparison when you combine all of these benefits together. So I don't want to lead you on and make you think that this is just a walk in the park and that there's no work involved with rental property investing. It is a little bit more work than stock investing, where you push a button and you own that stock, right? But at the same time, if you're willing to do a little bit more work, like in the scenario, I talked about a bank giving you 100% financing to where you have no money out of your pocket. Now, if you're just gonna buy a turnkey property off the MLS, then that's probably not gonna work. The bank isn't gonna give you 100% financing. Typically, they want you to have some skin in the game. But if you're willing to buy a crappy property, rehab the property, refinance the property, you can typically refinance almost all your money. Typically, I usually get all my money out depending on how well I bought the property in the first place, and then you rent the property. So now you've got $0 in the property. The bank has financed it 100%, and then you can continue on with the strategy from there. So you've got to get your hands dirty a little bit if you want to really take advantage of this. But if you're willing to do that, there is no comparison in my mind to any other investment that's out there. So I'm going to go over the 5 major benefits of investing in rental properties. And I'm going to start with one that's a little less known, or a little less popular, I guess, amongst newer investors, because most people shoot to the cash flow right away. But I want to kind of go in backwards order in that scenario that I just laid out. And I want to talk about the tax advantages first, because when you're first starting out, this might not be as meaningful on one deal, But once you start to build a portfolio, this makes a massive difference in your tax situation, and the IRS is incentivizing you to buy rental properties. So there's two major tax benefits in my mind that come along with buying rental properties. And I want to preface this with the fact that I am not your friendly CPA. I am not an accountant. So definitely talk to your accountant about this before you make any decisions. But from a strategic level, from my experience investing in rental properties, these are the two big tax advantages that I see. So when you're buying a property with the intent of owning it over a long period of time, the IRS treats that much more favorably than they do when you buy and sell stuff quickly. So if I was to flip a property, I would be taxed on any profit that I make. After all that work, I walk away with, say, maybe $20,000 in profit. I'm gonna be taxed at my ordinary tax rate, which is typically the highest rate that you can be taxed at. But the IRS incentivizes you to hold properties. So if you hold it over a period of time, typically a year or more, you're gonna be taxed at the long-term capital gains tax rate, which is right now it's 15%. It can change over time, but that's what it is right now. So you're getting a much lower tax burden when you go to sell these properties. The second big benefit that the IRS is going to give you is that they are going to let you write off the interest portion of your monthly mortgage payment. So every month you're making your payment to the bank, and part of that is principal that's paying down your loan, but usually the much bigger part is the interest payment. So at the end of the year, they're gonna let you add up all your interest that you paid to the bank throughout the year, and you can deduct that from your income. And so it's a big tax write-off at the end of the year. So you can see how these tax benefits really add up over time, especially once you get to scale where you've got lots of properties and you've got a pretty big portfolio. Sometimes people just buy rental properties for the tax benefits because they have so much other income that these tax benefits are offsetting. It really helps them with their strategy once you get to a certain size. Now, the second major benefit of owning rental properties sort of is along the same lines of tax benefits. It is a tax benefit, but I like to think of it as a separate category, and that is depreciation. So the IRS allows you to write off the value of your rental property over time. It views rental properties as a business asset, the same as a computer that you bought to run your business, or a piece of office furniture. Over a certain period of time, those things are going to wear out. And so the IRS allows you to write off a portion over a period of time. So it's going to be a lot shorter for office furniture or a computer, but for a typical single family home, they say 27 and a half years is the useful life of that asset. So every time you file your taxes, so let's say you have a $130,000 house that you purchased. Now they're not going to let you write off the value of the land because they say land doesn't wear out, right? So say the land's worth $30,000, the house is worth $100,000. So you divide out 27.5%, and you've got $3,636. So every year, the IRS is going to let you write off $3,636 of that property. So again, this is just one more tax advantage that you can layer on top, and as you grow your portfolio, this becomes pretty significant. So the third major financial benefit that rental properties are going to provide for you is that they increase in value over time. So appreciation. It's the opposite of what the IRS allows you to do on a yearly basis. They allow you to depreciate the property even though it's actually appreciating in value. So the first question people are going to ask is, how much is it going to appreciate over time? They want to know, what's the specific number that I can expect if I just go out and buy a random rental property? And the problem is that real estate is extremely location specific. So you can't just go across the street and buy a property and expect, well, it's going to appreciate 3 to 5% because that's what the average is across the entire US. The average across the entire US is made up of a lot of different locations. So there's locations that will appreciate hundreds of percent over time, and then there's actually locations that will lose their value over time because people move out of that area, or the demographics change, or whatever causes the change. And so those are gonna offset each other. And so you'll get this average that's trending up over time, but you need to pick the right locations at the same time and do a little bit of research up front. So appreciation is the third major benefit that you're typically going to see over time, as long as you pick an area that people want to rent properties in. Before I get into the fourth major financial benefit of owning rental properties, I do want to mention, if you are getting benefit from this, please comment below and let me know what your biggest takeaway is. Also hit subscribe, hit the little bell next to it that will notify you when new videos similar to this one come out on a weekly basis. Also, give me a thumbs up if you're enjoying this video. So that brings us to number 4. And this is where you're going to experience the most wealth building when it comes to rental properties, most likely. That's certainly been the case for me. It's been the case for a lot of other rental property investors I know. And this has to do with creating equity in the property. And it comes from a combination of what we talked about already, the appreciation, but also the principal pay down. What I talked about in the intro scenario is that somebody's signing up to pay down your loan. And what you're doing is you're providing a really great home for someone to live in, and thereby they're paying you on a monthly basis. They're paying you the rent, and then you're gonna take that rent and you're gonna turn around and use a portion of it to pay your mortgage payment on a monthly basis, right? So essentially, somebody else is paying off your principal, paying off your mortgage on a monthly basis. So how this works, and I think it's helpful, I've got an extremely sophisticated graph right here where I can explain this. So I think it's helpful to take a look over a 1 month time frame what this looks like. So if you were to buy a $100,000 property, and let's say you got a loan for the value, so it's worth $100,000, the value of the property is $100,000 and the loan is $100,000. So your payment on a 5% 30-year fixed, just standard mortgage would be $537 a month, right? So what happens after the first month? How does that payment work? So $120 of that $537 payment is going to be principal. So your overall total loan is going to be reduced by $120 that your tenant essentially is paying in rent. Now, if the property appreciates on average of about 3% per year, that means after the first month, it'll be about 0.25% that it appreciated. So if it's a $100,000 property, it just appreciated $250. So this spread now, after the first month, if all is even on day one, after the first month, now there's a spread of $370 between what you owe and what the property's worth. And so that gap just keeps growing every single month. And that's why there's that big saying, don't wait to buy real estate and wait. And that is because this gap just keeps growing. So the final major financial benefit of owning rental properties is the one that everyone talks about, that everyone knows. It's the reason why most people invest in rental properties, and it is that paycheck on a monthly basis. It's the cash flow that you get. So what is cash flow? It's just simply the difference between what you make from the property and all your expenses. What's left over at the end of the month is your cash flow. So you can accumulate all these properties that are paying you these chunks of cash flow. I've said before that I target $300 to $500 per month per property in cash flow. That's what makes it worth it to me to buy a property cash flow wise. So one thing to mention when it comes to cash flow is that this is income. You will be taxed on the cash flow that you're making on a monthly basis, but because of the tax benefits that you receive from writing off the mortgage interest and depreciating the property, usually it's tax neutral at the end of the year, and you don't have to pay any tax on this income because of the tax benefits that you're already receiving by owning rental property in the first place. So if all 5 of these major financial benefits were not enough, there's sort of a bonus benefit, and that is that you are going to receive the absolute best financing terms on real estate over any other type of investment or business or anything really out there that you can finance. So there's really not another asset class out there that I'm aware of where the banks are lining up to give you a fixed 30-year super low interest loan based off the interest rates today, even though they might go up 10% in 10 years, they're gonna lock in the interest rates today and you can pay it off over a 30-year time horizon. That just doesn't exist in the stock market or investing in Bitcoin or buying art. You know, those types of loans just aren't out there because real estate, the banks have recognized real estate is such a stable investment and such a great investment. When you look at all 5 of the benefits that we just talked about, it's a great investment over time. So I'm not here to convince you to buy rental properties. I don't benefit in any way if you do, but I think the numbers speak for themselves, and I've seen the massive financial benefit that it's had in my life and the life of so many others that I've worked with over the years. So if you're interested in more videos like this, like I said, please hit subscribe. Also, I read all the questions in the comments section, so if you have a question, you can ask it there, I'll answer it there, or I'll just make a video about it. So let me know what other topics you want me to make a video on relating to rental property investing, and I'd be happy to do so. Also, we've got a Facebook community that's super highly engaged, it's growing. Thank you so much for joining me, and I will see you in the next video.